Following a rippling effect on the cryptocurrency market from the FTX collapse, the Gemini exchange was forced to halt withdrawals. Investors worry that Genesis, Gemini's lending partner, may follow suit and declare bankruptcy. There are worries in the cryptocurrency community that the fallout from the FTX crash will cause numerous further casualties over the coming weeks. Hit that subscribe button before we continue. With the recent bankruptcy of the FTX crypto exchange and the repercussions it is having on the entire sector, there has been more than enough unrest in the cryptocurrency field. Additionally, Gemini's decision to halt withdrawals following the FTX collapse was just publicized. Cameron and Tyler Winklevoss, the two brothers who successfully fought Mark Zuckerberg in court over the creation of Facebook, created Gemini Trust Co. Gemini has to halt withdrawals for retail investors in its yield product since Genesis Global is its only accredited borrower. Genesis disclosed a $175 million commitment to FTX. The effort to unravel the FTX web is just getting started. What's going on in the cryptocurrency world? Recently, cryptocurrency has received far too much negative press. Now, it appears that the FTX collapse has affected the whole crypto space. It appears that the FTX collapse will result in a large number of casualties. It was made known that BlockFi was getting ready to file for bankruptcy a few days after FTX collapsed. Additionally, the Ontario Teachers' Pension Plan disclosed that its $95 million investment in FTX had been lost. The near future doesn't look good for other cryptocurrency projects because Genesis and BlockFi have suspended withdrawals in response to the FTX revelation. There are signs that additional sell-offs and liquidity problems may occur. Additional rules might be forthcoming. It's no secret that the SEC and even the Fed want to see more regulations on cryptocurrencies after seeing how much money was lost in this market in 2022. Leading Fed regulator Michael Barr issued a warning that oversights of cryptocurrencies may be on the way soon. Regarding potential rules, the Fed also noted the following in its news release. Over the past few years, we have witnessed a tremendous increase in crypto asset activity as well as substantial bouts of stress. However, as we have lately seen, many financial advances also come with risks. These risks can include liquidity runs, the abrupt decline in asset values, the misappropriation of customer funds, fraud, theft, manipulation, and money laundering. If these risks are not properly managed, they could hurt small-scale investors and work against the objectives of a stable and equitable financial system. Karine Jean-Pierre, the press secretary for the White House, added that if cryptocurrency is not properly regulated, Americans may suffer. It was made clear that careful regulation was required in this area. What recent Gemini crypto news is there? Due to the fact that numerous exchanges and money were connected to FTX, many have theorized that the FTX crash contagion is still active. On November 16, it was revealed that within a 24-hour period, Gemini had seen $563 million in client outflows as opposed to $78 million in inflows. Following Genesis Global, the product's partner, choosing to halt withdrawals from the borrowing platform, Gemini informed that clients of the Earn program would not be able to withdraw any money. Customers can utilize Gemini Earn to earn interest on their cryptocurrency. Other products and services, such as Gemini Staking in the Grow, will continue to function regularly, according to Gemini. The business mentioned their status as a full reserve exchange and custodian. Customers were given the assurance that money held on the Gemini exchange is held one and that it is always possible to withdraw it. Why were Gemini's withdrawals stopped? The problem is that Genesis is a key participant in the Earn program, which allows investors to stake their cryptocurrencies in exchange for yearly returns. There seems to be little Gemini can do at this time as Genesis has stopped withdrawals. Genesis stated that they were halting withdrawals due to severe market disruption and loss of industry trust induced by the FTX crash. It's important to remember that Gemini only received $400 million in growth equity capital a year ago, giving the business a $7.1 billion valuation. It was disclosed that Gemini and Genesis are collaborating to give users access to their assets as soon as feasible. In its most recent announcement on November 16, Gemini provided the following words of encouragement. While we regret that the Earn program SLA will not be reached, we are heartened by Genesis and its parent business Digital Currency Group's promise to use all reasonable efforts to uphold their duties to clients under the Earn program. On behalf of each and every consumer of Earn, we will keep collaborating with them. This is the top priority for us. We value your patience a great deal. What comes after crypto? Investors must wait and see how events play out because the FTX bankruptcy has raised worries about a contagion that might affect the entire industry. Almost all cryptocurrency prices have decreased by more than 60%. About $60 billion in this sector was lost because to a catastrophic crash earlier this year. It's unlikely that investors will continue to invest the way they did in 2021, when there was optimism about the future of cryptocurrencies, with all of this money leaving the crypto market. Since the collapse of FTX, pressure on cryptocurrency exchanges and lending companies has reached unprecedented levels. Concerns about liquidity and what might happen next are raised by FTX and its effect on the crypto ecosystem. Noting that some platforms are performing better than others is also important. Nexo, a lender, claimed that they were unrelated to FTX. Furthermore, SEC Chair Gary Gensler has come under fire in the media for his ignorance of the FTX collapse. There are rumors circulating about how Gensler will be confronted by Congress over how he missed such a significant fraud scheme. This FTX collapse occurred exactly 1 month after Kim Kardashian was penalized by the SEC for endorsing a cryptocurrency token on her social media page. The best way to invest is? You must be aware of the risks involved before investing in a volatile asset like digital currency. There are many dangers involved, so you shouldn't devote a sizable amount of your portfolio to such a dangerous asset. The majority of suggestions advise allocating no more than 5–10% of your whole portfolio to such a risky asset. Our artificial intelligence searches the markets to find the most profitable assets for a variety of risk appetites and financial circumstances. It then collects them into convenient investment kits, like our kit for emerging technologies. Artificial intelligence, AI, is used by both kits to support industry diversification. You can strategically invest in the larger ecosystem spanning 4 vertices, including crypto, tech ETFs, big tech firms, and small tech companies, as opposed to solely investing in a particular currency or business. Anytime you want to better safeguard your gains and cut down on your losses, you can turn on portfolio protection. To sum up, it bears mentioning again how dangerous investing in digital assets is. Additionally, keep in mind that if something looks too good to be true, it probably is. The FTX bankruptcy is another evidence that no one is protected from the crypto winter. This is it for today's video. Subscribe to our channel before leaving.